AUD USD has rolled over hard enough that traders are no longer asking how high it can go, but whether the reversal pattern is already in charge. The pressure point is simple. AUD USD just flipped from trend support to reversal risk. AUD USD forecast is the search phrase, but the immediate question is where the next break or failure actually sits. That is why traders keep repricing the same headline through multiple markets at once. The pair broke below its 50-day moving average, failed to hold above 0.67, and saw momentum cool from previously overbought conditions, all classic signs that bullish control is weakening. Technical levels matter here because large FX markets often use those zones as trigger points for positioning, not just as visual chart decorations. This sets the first macro anchor before momentum traders and policy watchers add their own reactions. A head and shoulders pattern was described on the daily chart, with support near 0.655 and 0.648 and 0.665 plus 0.67 now acting more like resistance than help. In easy English, an EMA is a moving average that gives more weight to recent prices, so traders use it to judge short-term momentum. At this stage, technicals and macro are reinforcing each other rather than pulling apart. For people typing AUD USD forecast, the market signal matters because it feeds into broader dollar, liquidity, or risk conditions. On the fundamental side, risk-off sentiment, stronger U.S. safe haven demand, and concerns about slower global growth all weighed on the Australian dollar. That is the part that starts to spill into broader liquidity conditions. The mechanism is a risk-sensitive currency losing the macro backdrop that had been helping it. When growth confidence weakens and the dollar regains safety appeal, chart breakdowns suddenly matter more. For crypto viewers searching KW, the broader importance is dollar behavior. When the dollar side of major FX pairs gets stronger, risk assets often feel the squeeze too. Once the mechanism is visible, the move stops looking random and starts looking systemic. This matters to crypto viewers because the same global shift that hurts the Australian dollar often shows up as tighter conditions for other risk assets. If capital prefers safety over growth, crypto usually feels that change too. That does not mean crypto copies cable or the Aussie tick for tick, but it does mean global liquidity and risk appetite are being priced in the same macro neighborhood. This is why risk assets often feel the change even when they are not the market named in the headline. What remains unclear is whether this is only a correction inside a broader range or the start of a more persistent downtrend, driven by weaker commodity expectations and stronger dollar demand. Watch whether 0.655 holds, whether China-linked growth data stabilize sentiment, and whether the Fed or Reserve Bank of Australia changes the rate story enough to interrupt the current reversal pattern. The unresolved piece matters, because macro reversals often begin with an argument about durability. That leaves AUD USD forecast tied to the next macro confirmation, because one session move never settles a bigger liquidity story by itself. If the pair confirms the move, the macro message gets louder. If it snaps back, this becomes another reminder that key levels matter only when follow-through arrives. The next confirmation will come from follow-through across linked markets, not one isolated print.